Alright, ladies and gentlemen, this is the CIMB Stock Exchange Challenge regional level, grand final.
Please give it up for StocksElite from Malaysia.
Good morning, ladies and gentlemen, and good morning, honorable judges, fellow investors. Today, our team, StocksElite, is here to present our trading strategies in this competition. My name is Mui. It's very easy to remember my name. You know how Moose sounds like? Mui. Alright, so that's how my name. So in the first round of this challenge, we achieved a high net return more than 129%. And this is not a small figure. Thank you. And this is definitely not a joke. Alright, so how did we make it? And what is our secret? Ding, ding, ding. Diversification, and diversification. Even Warren Buffett said, don't put all eggs in one basket. We follow exactly what he did. We diversified through countries, stocks, and industries. By doing that, our risk will greatly reduce. So how did we diversify through countries? We look at the analysis of each country. There are 4 ASEAN countries available to us. They are Thailand, Malaysia, Singapore, and Indonesia. Firstly, Thailand. Although we know there were some political problems in Thailand for the past few years, but now, no problem. We love Thailand because it had recovered from the political turmoil between the red shirts and the yellow shirts. Also, the army general had came out and told the people, don't worry, we will return to democracy after 1 year. Fellow investors, the political risk is greatly reduced. Also, the Thailand's economy is well diversified, followed by the recent oil price that dropped. This added to the attractiveness of investment in Thailand. Next, we come to Malaysia, my home country. Malaysia has low political risk and has a very stable growth rate between 5% to 5.5% each year. But its prolonged deficit and the upcoming GST introduction that actually makes it less attractive than Thailand. But no worry, it is still good for investment. Next, Singapore. Singapore is a very peaceful and stable country. In terms of economy, it has a very stable growth rate as well. But it relies a lot on the foreign trades. Shall there be any external shock, the economy will be badly affected. As such, Singapore is not as attractive as Thailand and Malaysia. But again, don't worry, it is still attractive for investment. Next, Indonesia. In the earlier of 2014, there was a political issue in Indonesia. The election was held. Jokowi won the election, but his opponent Prabowo did not accept the result. Prabowo, as a former army general, he went round Indonesia and campaigned against the result. Ladies and gentlemen, this caused a political risk to the stock market. As such, we did not invest in Indonesia. We only invested in Thailand, Malaysia, and Singapore. But of course, today the political risk is greatly reduced. So, after looking at diversification through countries, we also look at diversification in industries. We follow Michael Porter's 5 forces strategies in industry diversification. In industry selection, we have selected the gold-green industry. Why? They offer great potential growth. With high population growth, everyone is talking about 3 R's. Recycle, reduce, and reuse. Even all governments, they support all the gold-green campaigns. And that's why we see great future in this industry. What is the other attractive industry? The property sector. As I mentioned, with high population growth, rural to urban migrations, these factors have contributed to the high demand for housings. You can buy a property or you can invest in property stocks. Of course, there are also other attractive industries such as the healthcare industry, the internet-based business. But due to the time constraint, we can't discuss all of them here. But of course, afterward you can come to us. Alright, so what about the stocks diversification? And what about the trading strategies we have used in this condition? Next, let us invite Sam to tell us more about it. Thank you.
Thank you, Mui. Good morning, ladies and gentlemen. I am Sam. As Mui mentioned, diversification, diversification, and diversification. After discussing through diversification of country and industry, we now look at diversification of stock and trading strategy. We allocated our asset in Thailand, Malaysia, and Singapore, but not in Indonesia. By doing this, we greatly diversify our country risk. Finance theory tells, never invest in one stock only. Next, in portfolio management, we optimize our risk and return. These were the 2 factors we took into consideration. We tried maximizing our return for same level of risk, or minimizing our risk for same level of return. Fellow investor, next is our penny stock strategy. Penny stock provide greater percentage return as compared to high price stock and blue chip stock. For example, comparing a $5 stock with a 50-cent stock, 10-cent increase in price give both different percentage return. 10-cent increase in price for $5 stock is only 2% return. But 10-cent increase in price for 50-cent stock is 20% return. Besides that, we could also buy larger quantity amount of stock by investing in penny stock. Next is high strategy is trading in high volume stock, also one of our strategy. High trading volume show that markets was efficient. The spread is narrow. There is many buyers and sellers. Transaction could be easily done. If the counter was thinly traded, after we have bought the stock, we might end up in the situation that we could not sell the stocks. Therefore, trading in high volume stock helps to reduce liquidity risk and enhance our trading strategy. In trade range strategy, we set our trading action as buy on the support and sell as resistance. With this, we could make ourselves to be more disciplined. Discipline was very important for trading to ensure we follow our plan and avoid emotional trading. Now, I would like to pass to Chia to brief you all further. Thank you.
Thank you, Sam. A very good morning to ladies and gentlemen. My name is Chia. Our team StocksElite have made a very high profit of 129% in 3 weeks' time. So you may be curious, what stock did we buy? Based on our analysis, we selected stocks that have good expected return in the future, and diversification helped us to reduce our portfolio risk. We selected MPAR that was listed in the Stock Exchange of Thailand. The company was a penny stock with high trade volume, although we made losses in the past. But in year 2001 to 2013, the company was turning around and showed a good cash flow position. We expected this company to make profit in year 2015 and beyond. Fellow investors, let us look at the short-term chart of MPAR. The highlighted area shows a heavy volume traded in October 2014. And look at the price action. What can we see? The share price has broken up from the resistance level at 7 satang and went up to 9 satang. By the way, 1 Thai baht is equal to 100 satang. But the next day, the share price came down from 9 satang and back to 6 satang. So, what did this mean to us? Ladies and gentlemen, it showed a fake breakout, and we believe that the share price has a high chance to be traded back in the range. We accumulated this share at 5 satang and sell at 7 satang. We also considered of cutting loss if the price dropped below the support level at 5 satang. Ladies and gentlemen, how much profit do we make from MPAR? $23,000 US. Next, what else did we buy? Yes, we love Thailand. Another Thai stock that gave us a very good return was IEC. It was one of the solar energy counter that have good future potential. The company also fulfilled all our trading strategies. Fellow investors, the chart supported our fundamental analysis. Looking at the past data of IEC, the share price was traded in a range bound between 2 satang to 4 satang. And this trend has appeared for the past 9 months from January 2014 to September 2014. In our analysis, the share price has successfully broken out from the resistance level at 5 satang in October 2014. Looking at the golden cross, the 10 MA line has crossed above the 20 MA line, and the MACD line has crossed above the signal line. Both indicators started to diverge, and this showed us a very strong bullish signal. We accumulated this share from 3 satang and closed all our position at 6 satang. We also considered of cutting loss if the price failed to stay above the new support level at 5 satang. Ladies and gentlemen, guess what? We have made 78,000 from this Thai stock. ขอบคุณครับ Thailand. After we have discussed stock selection, we now look at our organization implement flowchart. First, we collected the latest information that was related to the actively traded stock in the 3 stock market. We then shortlisted the counter that we plan to buy. Thirdly, we carry out our plan based on which counter to buy, sell, or hold. Decisions were made based on the majority among 3 of us, and this will help to avoid personal emotional trading. Next, we recorded our trading result and compared our actual result with our plan based on the new information and other related news that was collected. at the end of each trading day. If the need arose, we would rebalance our portfolio and the cycle is repeated daily. Ladies and gentlemen, after we have gone through diversification in country, industry, and stocks, our team StocksElite has made a huge profit of 129% within 3 weeks. And this is not a joke, that's why we are here today.